Hi, my name is Fan Yang, your Chief Technical Strategist here at ForexMinute.com. You're watching today's Forex video briefing. It is Thursday, August 7, and we're in the middle of the US session. The European Central Bank and the Bank of England both held rates and maintained their current stance on monetary policy. We had more insight from the ECB after its press conference, whereas we will need the Bank of England's inflation report next week and the meeting minutes in the following week to get a better gauge on its timeline on the rate hike. Let's take a look at the euro pound and what its reaction is telling us. The euro pound pair has been consolidating since July, stalling a bearish trend throughout 2014. The 4-hour chart shows support at 0.7874 while resistance is around 0.7980. Price has fallen back into the middle of this range ahead of the central bank meetings. The middle or central pivot area can be represented by the cluster of moving averages, the 200, 150 periods SMAs in the 4-hour chart, or the 0.7915 to 0.7934 range. During the central bank statement and the ECB's press conference, traders tried to bid up the euro pound, but it found resistance around 0.7955. In the 4-hour chart, you can see that price eventually came back down and remains in the central pivot area. This reaction shows that bulls are weak, unable to clear above the moving averages. If price end up below 0.7915 after the upcoming session, the August 8th session, the euro pound will likely be in a bearish continuation. So below 0.7915, bearish continuation. And in the daily chart, you can see that price is holding below a falling trend line after briefly violating it. The bearish trend therefore remains in play. And also you can see the RSI hold below 60 after digging below 30 and holding below 60. That shows maintenance of the bearish momentum. You also see price holding below the 50-day simple moving average. So all signs still point south for the euro pound. Looking back at 4-hour chart, it would take a bounce off of this 0.7915 area back above 0.7955 to signal a possible price bottom forming. In this scenario, we would be looking at a Kilroy or an inverted head and shoulders pattern, right? Shoulder here, neckline here, another shoulder here. In that scenario, a break above 0.7990 would signal a significant consolidation bullish correction against the 2014 downtrend. Otherwise, pressure will remain towards the 0.7874 low. With downside risk, let me switch to the weekly chart. With downside risk towards the 0.7764 support pivot and 2012 low. And that wraps it up for today's Forex video briefing. Once again, I'm Fan Yang, your Chief Technical Strategist here at ForexMinute.com, wishing you safe and good trading.